Good morning, everyone. Welcome to Blockchain Masterclass organized by AMPx. We're so glad that you could join us this beautiful morning. I am Sharifa and I am from the Community Engagement Department of AMP Singapore. So, as usual, before we start the session properly, do spare me a few minutes sharing about us. AMP. AMP Singapore is a registered charity formed in the year 1991, and since then, we have been providing social services to the public. Our social services consist of the Debt Advisory Center, Family Services, Marriage Hub, Training and Education, and Youth Units. So today's masterclass will be the introductory class to blockchain, and we are honored to have Aziz to be our trainer for today. So I'd like to also remind everyone that this is a recorded session, and without wasting any time, the floor is yours, Aziz.
Thank you. Hey everyone, my name is Aziz, and let me share my screen with you guys. All right. Hope everyone had a good morning. So just a quick introduction about myself. My name is Aziz. I'm currently the Chief Product Officer of Fasset. We're a digital asset gateway that tries to focus on spearheading digital adoption across frontier markets. We're regulated across a few jurisdictions right now, as in starting with the GCC. We're one of the few. We're one of those trio licensed digital asset gateway in the GCC, and the first ever company in Bahrain to have a asset tokenization license. Before that, I actually founded Master the Crypto, which is a crypto media firm that focuses on basically simplifying the complexities of cryptocurrencies and blockchain. That you know I as in was acquired by a US media firm. So most of my time has been on cryptocurrency. So basically live and breathe crypto right at this point. So I'm really excited to share with you about what I know, so that you guys would have a greater understanding about this very nascent industry and market, and basically understand the motivations behind it, and hopefully give you a greater appreciation about this entire as an industry from my lenses. All right, so let's just dive right into this. Hold on. So what is blockchain, right? So I mean, this has been this is one of I've been doing this since since the past 5 years, right? And as in telling people, as in disseminating information and education about this blockchain, right? So, and this is a very popular thing to a very popular question. What actually is blockchain? Now, before we even get to the depth of what is blockchain, we have to really understand the bifurcation here, that blockchain and cryptocurrencies are two separate things. Of course, as in cryptocurrencies is what you see in the market, right? You see a lot of coins, thousands of coins in the market, like Bitcoin, Ethereum. Those are the manifestations of blockchain. Those are forms of blockchain technology, right? The underlying technology that powers these cryptocurrencies are blockchain. But also blockchain can be used to power any other forms or permutations of this technology, which does not necessarily equate to cryptocurrencies, right? Like you can have a blockchain for real estate that doesn't have their own cryptocurrencies. Or for example, right now when you hear of governments trying to experiment with their own stable coin or digital currencies, right? We call them CBDCs, central bank digital currencies. They use blockchain technology, but they don't necessarily have to create like a cryptocurrency under the definition of what, for example, Bitcoin is. So to my point, as in whenever you hear crypto blockchain, it's very important to bifurcate those two and not conflate because the core of the matter is that there's so much more use cases of blockchain in terms of how it could as in fit into various industries or solutions within those industries, right? So that's why I'm jumping into blockchain first, which is the underlying tech that powers every single thing, cryptocurrencies or whatever new technologies that we see across, right? And that understanding blockchain will give us a better understanding about the permutations of that, of the technology, right? So what actually is blockchain, right? So here's the definition, right? As in public ledger cryptocurrency transactions. Now, literally, as the name suggests, is basically a chain of blocks. So imagine a visual block in your head represented in the visual that I'm showing you, and within the blocks are just transactions of any digital asset or crypto asset, right? So it's basically that, right? All chains, all transactions stored on a block, and the block is stacked up, like just like a Lego, right? So forever, right? So that's basically blockchain. So one cool part about blockchain is that it is decentralized, right? So and immutable. Now, what is decentralized? To understand decentralized, you have to, for example, the tenets or parameters are being centralized, right? Centralized is a single or a couple of entities controlling things, right? Decentralized is not controlled by any single or group of entities, right? It's open playing field. So an example of in computer architecture of a centralized structure is like right now when you try to Google something, you go through Google servers, right? And they give you what you're looking for, right? What is blockchain? Then Google will tell you based on their database, right? Okay, these are all the articles or information about blockchain. So it's basically an interaction between a central server and you guys, which are clients, right? So that's a central. Now, what's the issue with that, right? The issue with that is all the information or everything is contingent on that central entity, Google, to act uh, in the best way, right? To ensure that, for example, information is accurate, right? Whatever you're trying to look for is manifested in front of your eyes. So in that, you can see that there's a high degree of reliance, a high degree of trust and reliance. Now, in a decentralized setting, and in a blockchain setting, there is an absence of trust. You don't need to trust anyone because you know that the protocol works on its own based on the underlying codes, right? Which is decentralized. And by decentralized means anyone can be part of the system, anyone can participate in the system as long as you have a computer, if you're sitting in Bangladesh or in China, if you're, anywhere, right? As long as you have an internet connection and a computer, you can participate in the network, right? And that's decentralization. And why people are attracted in the first place is just like that, right? Equality, equity, right? No one is, no node or no computer or no client is better than the other, right? Everyone is fair, right? So that sort of like macam give a sense of empowerment, right? Because everyone is the same. Now, and that's decentralization, right? And what is immutable? We always pair immutable with blockchain and decentralization. Immutable is the beauty of blockchain is that any transactions recorded and finalized on the blockchain cannot be erased, cannot be changed, is censorship resistant, right? And that's because of the structure of how the blockchain works, right? So if you look at the blockchain, right? For example, right now, it's basically a global competition by miners, right? Basically, miners are the ones that validate the transactions, and miners can be you, right? How do you participate? Just have a computer, internet connection, download the open source, as in Bitcoin, for example, codes, and then you're on your way of becoming a node. And what you can do is basically look at thousands of transactions happening right now, and mine them, right? And what's your reward for mining? Mining is basically taking all those unconfirmed transactions, putting them in this block, in the next block, and doing a lot of hashing. Hashing means mathematical, as in equation solving, just like a Sudoku, right? And then if you are the lucky miner that, as in, that gets to solve for the mathematical equation, then you win the race. And then what's your reward for this? You get Bitcoin, right? So that's a natural incentive for you to participate, as in you can earn Bitcoins by mining, right? Which is just a way of validating transactions and adding to the security of the network, right? So and that immutability means that as a miner, as in all you can do is just put all the transactions in a box and just secure the box using math, or what you call as in cryptography, right? That's why it's called cryptocurrencies, right? Using cryptography to secure all these things, and then once it is secured, it is stored, as in it's linked to the previous block. So it's all a chain of blocks, right? And that the information within that block cannot be changed once it is in the once it is confirmed in the blockchain, right? And that's the power of it, right? As in, because with a central server like Google, you wouldn't know what has changed, what has been changed, as in, and they have the autonomy to do anything with the data, the information that you seek for, right? And that's just a very simplistic sense of the Google client relationship, right? There's other things in terms of your own data, stuff like that. So that is in essence blockchain. It's just a way to store information in a decentralized and censorship resistant way, which uses cryptography to secure everything, right? So that is blockchain. Now, why is it so revolutionary? Because this is a more technical understanding on how it is more revolutionary. Of course, the high level revolution in terms of why blockchain, the start of blockchain, which is Bitcoin, the creation of Bitcoin, right? Obviously, the high level is that, oh, it decentralizes finance. You can send money from anywhere around the world at a fraction of banking costs and within 10 minutes, right? And that's why it's revolutionary for anyone like us, right? For any end user, is because you can send value anywhere around the world in a very, as in, low cost way and efficient way. I mean, if uh you were to make a what you call it, a global transaction, right? You via the banking system, it's T plus 3 days, right? 3 days for banks to process. And it's really a pain, as in, knowing the banking system, right? When you send money, there are a few intermediaries down the line, right? When you send to a global bank, global remittance, right? You have your own bank, you have the beneficiary bank, you have the correspondent bank in between, the correspondent bank of your bank, the correspondent bank of the beneficiary bank. And that's just uh, if there's no other correspondent bank between both of your correspondent banks. So it's really, really a black, I mean, for normal users, it's a black box of all the intermediaries. And of course, what does intermediaries do? As in, they do their work and they get the cut out of it. So imagine all those fees across all the intermediary banks, right? So that's why it is inefficient. 3 days to process everything. Along the way, your funds is just battered up because it is all the intermediaries get a cut of your funds, right? And and Bitcoin tries to revolutionize the entire financial infrastructure by just saying, I can send Bitcoin to you, or I can send value to you, as in directly without any intermediaries, right? So the disintermediation of finance is what's so powerful about Bitcoin, which then is the start of the entire industry, right? With the blockchain and then other cryptocurrencies. So on a very high level, that is why it's so revolutionary, as in, because it disintermediates finance, traditional finance, right? Now, on a more technical level, why I really appreciate this technology is on a technical basis, they solve two main things, right? One is Byzantine generals problem, and the second one is double spend problem. Now, double spend is basically before blockchain or before cryptocurrency, whenever you create a virtual asset, anyone creates a virtual asset, it's very easy to create duplicates of it. And therefore, the value, you cannot retain the value. Pasal it's like you can print another virtual asset because you're doing it centrally, right? You can just print another one, and therefore as in you cannot maintain that value of that. And it's like uh, if if there are many replicas or many uh, photocopies of it, for example, right, then you lose the value of that, right? I'm not even going to, I mean, the analogy is the fiat currency system where government prints money, but no, that's controversial. But double spend is simply that. Before cryptocurrency is that this is a pertinent problem in virtual assets. How do you solve for double spend, right? Because you can't maintain the value of the asset if the actors can just double spend, right? So, and that is, and how does cryptocurrency solve for that? Cryptography, a way to secure this all the transactions, as well as the decentralized system ensures, or the mechanics of the blockchain ensures that you cannot game the system by double spending, right? So that's basically it. Now, and this is the next problem before cryptocurrencies, which was in distributed computing, is the Byzantine generals problem. Now, what is it? This is a very interesting thing. Basically, think of it like this, like this scenario where there is uh, the Byzantine army is trying to attack an army, right? Basically, an area, right? Now, obviously, the Roman army is divided into battalions. Assuming there's like 10 battalions just coming surrounding the place in surrounding the enemy, right? Now, the issue in the analogy in this distributed computing scenario is that how can we ensure the only way to win the war is that the Byzantine army, the Roman army, attacks simultaneously at the same time, synchronous, right? If one battalion doesn't attack, they lose, right? It's going to affect them. So how do we ensure that the 10 battalions of the Roman army attacks at the same time? And this is basically a problem. How do you ensure that? How do you ensure that everyone attacks at the same time? Everyone gets access to accurate information and timely information, right? So because at any point of time, a spy can just act as a Roman, as in information bearer, and tell a battalion that, hey, we attack at this time. Well, even if it's a different time, or we tell one battalion to go back. So basically there's a lot of ways or vectors to game this system, and then the Byzantine army will lose, right? So, and that's how and what blockchain does, it ensures a global and single source of truth. So it means that for example, the block just now that I mentioned, right, the newest block in the chain, right, in the blockchain, right, that is the truth, right? That information that consists in the block, that is the truth. The truth has been gathered by consensus. That's why you hear, for example, consensus with when you hear blockchain, there's consensus, proof of work, proof of stake. It's all about how do you get consensus. There must be a way to get consensus so that every single stakeholder or participant in the system is in consensus that is the source of truth, right? And that's the revolutionary part about blockchain. How the way that every single one, millions of people within the blockchain, right, that participates in the system, agrees to a single source of truth because they're in consensus. And this consensus is why it's so powerful that we can all agree that there's a certain consensus which reflects or manifests as the source of truth. And that's what blockchain does, as in for the first time, using a system of using a decentralized data architecture, using cryptography, they are able to there is a way for all participants in a distributed network to gain consensus, number one. And number two is there's very, very limited ways to game the system. For example, the double spend problem. And that's why blockchain took off, right? Because the this is something very revolutionary, right? Now, again, talking about centralization, decentralization, why decentralization is good is because, as I said, in the banking example, removes all intermediaries, inclusion slash empowerment, right? In a system where everyone is the same, it's not just me saying it's the same. I mean, the system by design, the design of the system is agnostic. Anyone entering the system, the architecture doesn't care about, for example, the new guy or the old guy. They're the same in the eyes of the technology, right? So that's what's empowering. Right? You can enter a system and you're just part of it, right? In like what a level playing field. Now, no point of failure. This is a very important thing about blockchains is that they can never go down because it's a decentralized. If you look in this decentralized structure, right, the only way that the blockchain goes down or goes offline is every single computer within the network goes down, and we are talking about millions or even hundreds of millions of computers going down simultaneously at the same time, just global wipeout, right? I mean, that's although that is as in mathematically possible, but it is extremely inconceivable to understand that notion that every single computer across the world would just turn off, right? Now, in a centralized manner, in effect, for example, if as in of course the advent of cloud computing, all this, but in a very simplistic manner, if Google goes down today, you cannot do anything. I mean, there's no recourse for you, right? Your information is lost. You can't ping Google to ask for anything. It's just gone, right? And that's and what you that's what you call a single point of attack. And when it goes down, it goes down. That's it. And lastly is consensus, right? Of course, in a centralized way, you don't need consensus. You don't. Google doesn't need consensus from you to showcase any information or data, right? This central. But in a decentralized way, there needs to be consensus because that's the only way things can operate, right? There needs to be consensus. Okay. Now, why do I always go back to Bitcoin? Because Bitcoin was the first cryptocurrency created back in 2008, 2009. And therefore, the advent of Bitcoin just created this new entire infrastructure and industry that we see today in terms of cryptocurrencies and blockchain, and understand the implications or the potential of blockchain technology, right? So right now, there's over 11,000 coins. Many take derivative or inspiration from technology, and that is simply, I mean, the beauty of Bitcoin is that it, it is it's just 11 pages of, I mean, when Bitcoin was launched, the white paper or the document that talks about Bitcoin was just 11 pages, and it was a very elegant way of describing a new technology that that like essentially disrupts what we know about finance, about value, about the monetary system, right? So fixed supply, basically like gold, right? Fixed supply, and fixed supply means that obviously when something is fixed in supply, value goes up when demand goes up, right? Because there's a limited quantity. What in economics is scarcity, right? But more importantly, the main utility of Bitcoin is that the transfer of value in a in a decentralized way where it's peer to peer. You connect with the sender directly via the blockchain, no intermediaries, right? And obviously cheap, fast, all those key things that you look out for when you send money. In fact, right now, in my whenever, for example, for me, my because I have a bank, I have banks in the Gulf, right, in the UAE, and the banking system, I mean, to transfer money from UAE banks to Singapore, really a pain for me, because I immediately lose a percent or two in forex fees, and then the transaction fees of international wire settlement, international transfers, stuff like that, right? And you add up, I mean, the fees is like 2%, you know, things like. So it's very painful for me to transfer money from the UAE to, and it takes what, 3 to 5 days, 3 to 5 working days, not days, right? So I, I, for me, on a personal level, I appreciate this technology because, you can send money effortlessly, right? And if you've never tried, I implore you to try, because then you can understand the true utility of sending value across the world and globally, right? Circumventing the traditional financial system, which is so inefficient, right? So that's the main utility of Bitcoin for end users, right? Like any simple, like anyone like us, right? So it was really an ideological shift, right? Because, and the thing is, the creator of Bitcoin is that no one knows who he, she, or they are, right? They just created the white paper, and then bam, the codes are public. Now, the thing with open source codes, like, and this is a very technical point of clarification, is that like I said just now, when you want to participate in the Bitcoin system, all you have to do is have a computer, download the Bitcoin client, right, which is an open source software with all the codes. Now, with open source software across the board, right, not only Bitcoin, you can download that. You can download the codes anytime, anywhere, because it is public. The codes are public. So this means that you can analyze the code. You can look at the underlying Bitcoin code, right? The lines of codes, right? Anyone can look at them, anyone can download them, anyone can access them. And that's the beauty of open source. That's why we call it open source, because everything about the software and the underlying codes is open to the public, right? And usually cryptocurrencies operate on, as in their codes are usually open source. When you talk about true decentralized cryptocurrencies, right? Now, that's just a technical point of clarification to help you understand how easy it is, or the dynamics into how you enter into this ecosystem if you wanted to, right? Now, this was truly an ideological shift, as I said earlier, because this was really the defining factor on how a new monetary system, as in, is compared to a traditional financial system, and we can see the utilities or the benefits of that. And on a more, what you call that, uh, philosophical level, when you know and this is what attracts what you call the group of people that, anti-government, or those kind of people, who just wants to do stuff not illegally, but beyond the purview of the traditional financial centralized, surveil system, right? Where their data, the transaction isn't managed, controlled, or manipulated by any central entity, right? This is a powerful ideological shift, right? It's like, even now, the data that we have about, as in our online world, right, is in one way or another is managed by a central party, either by government, either by Google, by Facebook, blah, blah, right? Imagine a way where all the data is not manipulated, or managed by all the central entities, right? And that was why, and that is in through blockchain, right? And because it's decentralized and no one can control the system, right? And one thing to take note of that is Bitcoin is basically an amalgamation or confluence of things that makes it at the start very fuzzy, right? It is, yes, it is a store of value, right? Because obviously limited supply. You see the prices from cents in 2008. Now it's the highest at $60,000. Now it's what, $30,000, $40,000. It is store of value, obviously, because of the economics behind it, scarcity, right? It is also a payment network. I mean, in a sense that it's peer to peer. You send Bitcoin to another person via blockchain, as in this entire thing is fueled by the technology right? So it is also a payment network that gathers a single source of truth, consensus, and sends transactions from one place to another um, via their own network, and also digital money, right? Obviously, the whole nature of that is that it is digital in nature. So I've gone through, for example, how it works. Basically, the verification, the validation layer, or any single one of you guys that just sends Bitcoin now, your transaction is sent into to all nodes or full client nodes, basically, or anyone that runs the Bitcoin software. It's free, downloadable for you, right? So anyone can download that, and then all the as in miners start a global competition to find the next block, to get the transaction packaged in a block, and then do some math to secure it. And that's it. And then the winner of that at the shortest amount of time will get their block listed on the blockchain, right? And of course, for all their work in securing that block, they get Bitcoin. So it's a natural incentive or closed loop ecosystem where everything makes sense, right? Because you do the work as a miner, you get rewarded as a miner, right? And as in, yeah, basically that's it. And then once it is confirmed that your transaction has been passed and validated and included in the block, then your transaction is successful, right? So that's how a typical how blockchain works in a sense of how transactions are sent across. Now, all Bitcoin, for example, in the case of Bitcoin, it is pseudonymous. It is not anonymous, meaning that as in it doesn't mean that no one can as in see your transaction. I mean, it is a public ledger, a database, right? So anyone can see your transaction. If you go to the blockchain explorer right now for Bitcoin, you can see the list of the latest transactions. You can even go to the first transaction that have ever recorded in 2008 or 2009, right? And any transactions in between, millions and billions of transactions in between. And you can basically look at any transaction and look at, for example, the timestamp exactly on the dot, what time it happened, the exact value sent or received, the beneficiary address or the sender's address. All the data is there, right? But all those are transactional data of the transaction. It's just like looking at uh, a bank statement, right? But obviously with no identities attached, right? Because it's just the senders and receivers address is just a wallet, a string of hexadecimal, basically just like random numbers and letters, but it belongs to, for example, a particular person. Now, why is it pseudonymous, not anonymous? Yeah, if you look at all the transactions, you can see the sender and receiver, right? But you wouldn't know who that is, right? But the thing is, there are tools available out there if to pack or to link the address to a single user, because he's done his KYC or stuff like that. He's known, and therefore you can link this guy to this address, and therefore he owns this wallet and all the value and all the coins within that. So that's why it's called pseudonymous, because you can link an identity to a random transactional address. So Bitcoin is pseudonymous, not anonymous. You cannot just transact and think no one can track you, right? There is a way to link, especially if you interact with exchanges, centralized exchanges, like Binance or what. There is KYC. You have to do KYC, right? KYC means you have to send your selfie, your ID, your proof of address. So there is a database of your personality, of your particulars, right? But yeah, I mean, that's just me stating that it is pseudonymous nature, right? Now, the benefits, as I said again, trust. So you don't have to trust anyone. You trust the system. Okay, there is a degree of trust, and meaning that you trust the blockchain to do what it is supposed to do, but then again, it is open source software. You can look at the codes. You can look at how it is working, right? In a span of over 10 years, right? There is no foundational weakness or or what you call it, vectors of issues, or things that can really as impose as a problem to the inner workings of Bitcoin, for example, right? Because why? Because if there is a foundational issue, Bitcoin would be zero by now. If there's a way to game Bitcoin, Bitcoin would be zero right now. But the fact that it is getting more adoption, more traction, and value is ever increasing, that's simply the case. Transparency, as I said, you can go to the Explorer and just look at any single transactions that you want. Any transactional data is open to the public because it is a public blockchain. Immutability, no one can change anything once it is confirmed and finalized in a block. No one can change it. And how you might ask me, right, on a more deeper level, how is it immutable? Why can't anyone change it? Now, if you look at the blocks, right, if you look here, right, assume the colored block is the latest block to be included in the blockchain, right? Now, to start the next block, an input of the next block, of the newest block, must include the input of the last block. So the information of the last block is the first input to the new block, and therefore then all the transactions get packed and it's repackaged, validated, secured, and then once that's done, a new block comes in. So any new block, every block that you see, right, has an input or is derived from the previous block, right? So why is it important to understand this? And that's why it adds to the immutability of it, right? Because for you to change anything in the new block, you need to change the previous block and go down the line. And for you to change the previous block, you need to change the input or the previous block. Now, imagine since the start, what we call the Genesis blocks, the first block ever created in 2008, right? Imagine if you want to do any changes to the new block, you have to make the changes across all the blocks since the first block, right? Since the Genesis block, right? And that is like millions of blocks that you have to change. And when I said that initially that there's a time limit there's a time cap for creation of new blocks, usually average 10 minutes, right? Imagine changing all the blocks within 10 minutes, because within 10 minutes, a new miner will finalize the next block, right? Or even sooner, right? And therefore your work is in vain if you change up to only the 10% of the block, or even 20 or even 30, right? And therefore, this is very important to know, because for you to change something in the blockchain, you have to change every single block since the first block. And that is very, of course, you might think, why it is a complete waste of time, right? You only have 10 minutes to change every single thing. And then if you do that, as in, it is counterproductive, because you need to have a lot of computing power to do that within the time limit, right? And therein lies the conundrum. If you can use the huge amount of computing power to help the system by validating transactions, to secure the transactions, right, or to secure the network, you earn Bitcoins. You get what I mean? So there's right now, if you can do both things, right? One is that you can destroy the system by changing stuff all the way to the first, or you can help the system and then earn Bitcoins. That's why I call it a closed loop ecosystem, where economic incentives are aligned for you to do the right thing. If you mine and do the right thing, you get Bitcoins in return, right? But if you do the wrong thing, then number one, it would be a very, very expensive affair to get the infrastructure, computing power to game the system. And for what? Once you game the system, and once you change stuff, you expose the vulnerability, the entire thing becomes worthless, and then the entire thing goes down, right? So that's why, as in, the system is like, it makes a lot of sense, because there is economic incentives for anyone to participate in the system, to basically secure the system. So that is what gives rise to immutability. It is almost impossible for you to change everything within the short amount of time. It is very inconceivable, right? And lastly, of course, because of that, like I told you earlier, it is secure, all right, because that no one can change it, the data. This whole thing is secure, right? And that's the power of a decentralized database, right? For you to change one thing, you literally have to change every single thing across everyone's computers, you know. And that's why decentralized architecture are very, very, very secure relative to a centralized system where there's a single database, and once attacked, it goes down. Therefore, all the data is compromised, and that is not secure. Now, so that is everything about, for example, Bitcoin, the high level dynamics of blockchain, how it works, and of course, all the different coins have different limitations on how their blockchain operates, right? Bitcoin on average is 10 minutes, right? You know, and some coins it's shorter. You know, they can produce more, they can save or secure more transactions. They use a slightly different form of technology. The evolution of this technology is obviously increasing, and therefore different innovations in blockchain. Now, the next interesting thing about blockchain is, you know, it has proven itself to be a very safe, secure way of sending value, right? And therefore, the next phase is, okay, we know that blockchain has facilitated that use case very, very well. Now, how can we like macam uh, as in what's the next step, right? And it is basically smart contracts. So smart contracts is basically an evolution. It's just how the smart contract came out was Ethereum, right, which is the second biggest coin. But the founder said, okay, you know what? Blockchain is great in value, in sending value, in facilitating value. But what if we can expand the possibilities of blockchain? Basically, using the blockchain for more awesome stuff, right? Smart contracts, codes that execute themselves, and because of that, you can have decentralized companies. You can have decentralized way. People can build on top of the blockchain to create anything. Basically, you can create any application. If you want to do a real estate application, a supply chain application, if you want to do a trading application, all using blockchain, right? Yeah, so that is how, for example, the evolution came across, where there's so much more functionalities that a blockchain can support, right? And that is where smart contracts come along, and this is where Ethereum got into the picture and say, you know what, we're going to expand the use case of Ethereum. So the best analogy simply is that, for example, Bitcoin is the first and ever granddaddy of cryptocurrencies. It is the best in sending value. It's basically like an app in your phone, right? Your phone does an app, right? One thing, it does one thing perfect, right? Now Ethereum wants to be like the Play Store or the App Store in your phone, where anyone can create anything, any applications, and any user can access the applications on the blockchain. So that's what Ethereum plans to just create a native infrastructure where people can create decentralized versions of whatever that's found in the real world. So that's basically Ethereum. And how do you do that? With smart contracts, right? So that's how distributed decentralized applications are created using Ethereum, right? So, and the applications using smart contracts I mean, endless, right? You can use a voting system, you can distribute the storage, identity, like KYC in a decentralized way, payment, of course, with Bitcoin or any other communications, and you can store data, like maybe government data in blockchain using smart contracts, things like that, to automate the process. So those are the main applications of blockchain, as in using smart contracts. Now, the little time that we have is, okay, blockchain to facilitate value, and then as in smart contracts where anyone can create decentralized versions of whatever is found in the real world via smart contracts, which is just contracts which are automated. Codes are written to which are automated, right? They are self-executing. And last, as in which I'm sure if you, as in you can hear remnants of it, is DeFi. decentralized finance. And this is a very interesting today, because I can tell you right now that this is basically the a huge potential pocket. It basically, whatever that we have in the traditional financial world, all the services and the products, you put them in the decentralized world, and the confluence of all the innovation and potential, it just blows up the synergy, right? Because imagine a way of doing finance in a decentralized and non-custodial way. Non-custodial meaning that right now in the bank, if you earn for, okay, whether it's riba, right? Okay, assume an Islamic bank, right? Um, where you store your money, you get interest rates. What 1 basis point, 10 basis points, 0.1% per annum, or 0.01% per annum, right? For your savings to grow. So, or even an investment product from the bank, right? You deposit fixed deposit, or uh, invest in indexes. You go through an intermediary, right? And your funds are given to the intermediary to manage, right? You don't have custody of the funds, right? Now, imagine a system, that a way for you to have absolute control of your assets, but it is still working for you. You still earn the rates, and the rates are much higher than that of the traditional finance. So we are talking about uh, a risk-free way of just putting in your stable coins like USD or Euro dollars or even Singapore dollars, and just earning, for example, 1% or 60% per annum, like literally risk-free. I mean, on a financial point of view, risk-free, right? So you can do that in DeFi. And the best part, you have total control of the funds, because it is non-custodial. In DeFi, it is non-custodial, meaning when you participate, you use your own personal wallet, right? Okay, like this, like this. This is what you call a hardware wallet. But basically, this is where all your coins are stored, and then the coins right now, imagine, is just sitting with you right now, but earning money, right? In the traditional sense of the word, right? Investment or savings, things like that, right? And you still hold it. No one can take this away from you. And that's the power of DeFi, right? You can do whatever that you need to do in the centralized world, but you have absolute ownership and control over your coins. And that's frankly something mind-boggling, right? You don't have to trust any third party to do anything, or to manage anything, or if they go down, your funds go lost. But here in DeFi, everything is here. So that's basically one of the one I'm very particularly interested in. When you look at DeFi, the common metric is total value locked within the protocol, right? Because, for example, like me, if I store my funds in DeFi protocols to earn money, or to participate in financial products and services, which you normally would get in a traditional financial world, you know, I need to lock the funds, right? So basically, the total value locked in DeFi reached 70 billion. I mean, from last year, less than 10 billion, right? But bam, within 24, as in 12 to 16 months, you can see it went up exponentially, right? In the billions, almost like $90 billion within a year, right? And of course, the hallmarks of DeFi is that besides that of the blockchain that I shared earlier, uh, self-custody, non-custodial, means you have full custody, and composability. This means that the interesting part about DeFi is that you can tap on various decentralized protocols, and then you can sort of like stack them one after another, like Lego, like money Legos, right? They're interoperable with a lot of things, because the codes are, for example, uh, open source, and therefore you can mix and match whatever products and services. You can compound whatever that you need to, stuff like that. Now, I won't go on deep about the Sharia things, right? It's not because I don't care about this, but in fact, I particularly care about Sharia, and that's why I don't deal with, for example, riba, like related stuff in DeFi, right? The obvious most riba is like lending and borrowing protocol, right? I mean, where it's straight up riba, but there's so much more ways for you to do whatever that you need to do in terms of financial products and services that makes you money in a Sharia compliant way, right? And there's literally, I mean, that's another subject on the list, but I can assure you that DeFi is simply an extrapolation or mirror of the traditional financial network. So whatever halal or non-halal stuff in traditional banking or traditional finance, you would have in DeFi, right? It's up to you to navigate what you want, right? All the options are there, then you can choose. So you can look at there's various foundational aspects of the DeFi ecosystem, which includes wealth management, infrastructure, asset tokenization, what our business, as in our business is focused on, stable coins, payments, compliance. You can have that list. All these are foundational. Basically, as I said again, totally the same infrastructure of traditional finance, but only at this point, or for DeFi, everything is decentralized. That's the main difference. But you have the exact same foundational aspect, wealth management, liquidity, tokenization, compliance, same foundational structure of the financial industry. But now this is a completely new and cool way for you to enter a very nascent industry, right? Via DeFi to manage your money, as in yeah. So yeah, I think that's a very high level. I mean, obviously I can go on and on about this industry and how there's so much innovation and so much things going on that it's very hard for you to keep control or keep tabs of what's happening, because everyone is innovating at such a speed that it is very, very it sort of like gives you confidence that we are moving towards the right direction, and that the possibilities are endless, right? So this is where I feel like, especially for our Malay Muslim community, for me, I'm an Islamic finance student. So my as in I studied comparative financial, as in systems, right? Obviously the conventional and obviously the Islamic way. And the Islamic, from a personal point of view, the Islamic finance system has been lagging all the way, right? Obviously because we are tied to the conventional system. But for me, technology is how we can stabilize or neutralize uh, that disadvantage, right? Where a new system where you can tap on crazy synergies, and then you can basically create a new infrastructure for Islamic financial products, right? Which is on par with other conventional products in terms of development, ingenuity, innovation, which we have been very, very far back in terms of traditional finance, right? And so this is where the advent of this new technology is where I would see as a natural leveling playing field for us to really, like, bangkit and make and obviously on a personal level, on a to really, as in, manage your finances, right? I mean, as I said earlier, a risk-free way to earn like 100 times relative to traditional finance. I think that's a good value proposition. So yeah, that's just a bit of what I want to share. So I think right now is in the mods, sorry, admins. Uh, I pass it over to you for question and answers, or what?
Yep. Yeah, okay. So there are a couple of questions in the chat box, not too sure we can view. But we'll start with, let's see. Okay, so as Husan actually raised, so Muslims should come in as miners, investors, customers? Oh, you're muted.
Thanks for that. Sorry. One thing, that's a very good question. And one thing about what I love about this technology is that it is agnostic. It doesn't care who you are. It doesn't care where you come from. It doesn't care your socioeconomic background, right? It doesn't care about that. The technology doesn't care, nor the participants doesn't care, right? And that's one thing good, right? Because for you as a Malay Muslim, right, how do you participate there? There's so much ways for you to participate. As a minor, yeah, I mean, you can be part of the ways to earn money by mining, right? And when you mine, you secure the system, right? But of course, it requires a bit of technical expertise in terms of setting up your computers, setting up the client, the software, and having the necessary infrastructure in place in terms of hardware. Now, for me personally, as in those have what you call it barriers to entry in terms of knowledge, expertise, or tech understanding. Now, the easiest way for any Muslims to get on board is basically on the demand as on the buy side. Buy side meaning as an investor or things like that to manage funds or to invest in the technology. So that's the easiest way where you don't need to understand how, for example, this system works. You don't need to know how the mining system works. All you need to know is that, okay, this is a new tech, or even if you want to manage your finances in DeFi, in a very easy way, yeah, you can tap on various service providers for that. And, there's a lot of tutorials on that. So this is me talking about the lowest barrier to entry. But of course, if you have the expertise and, they, by all means, do the mining stuff and just participate in the system.
Okay, thank you. Okay, so what a couple more. Shakir raised. I understand blockchain technology is transparent, immutable, and irrevocable. So, assuming a transaction is being made, will the transaction in the blockchain state the purpose of the transaction being made for?
Yeah, I like traditional financial statements, traditional financial transactions where you need to state the purpose of transfers. Blockchain, you don't. All you have to do is just send the value and it will be sent, and all the details relating to the transactions will just pop up. Like I said earlier, the timestamp when it happened, the exact value that was sent, the beneficiary, and the sender's address will all be the normal transactions details.
Okay. Nura Afifa mentioned any advice for first timers who are interested in investing in cryptocurrency?
Yeah, I would say right now one of the main is don't do your due diligence. That's the most important. Understand what you're entering into. I mean, due diligence is a pillar of any financial decisions that you could have made, right? And if you were to put your foot in this new space, then only deal with popular or Bitcoins like Bitcoin or Ethereum, right? Because those are tested, battle tested, and are the earliest form, so you know that they are credible, right? Now, for example, in the DeFi space, it's very hard to navigate, for example, what's legit or not. Of course, you do your own due diligence, but it is very, very hard since there's a steep learning curve. Now, for a new user, I would just recommend you to just read up about it and just do your own due diligence about the major coins, top 10 or top 3 or top 5. Just try to look at that and just invest in for the long term, and don't care about short-term fluctuation. Don't be pulled into short-term volatility, because that doesn't benefit you. As in, this technology is in for the long run. I mean, if you invested in Bitcoin or Ethereum when it was cents, when it first started in 2008, 2009, 2014 for Ethereum, then you don't care about that until now. You open your wallet. I mean, I'm sure you're a very happy person, but along the ways, of course, did it go from 100 to 10 to $1? Of course. And those are the things that you shouldn't care about, because this is for the long term.
Should anyone have any other questions, please don't be shy to unmute yourself and speak. Okay, so Abdul Hamid has a question. Any significant risks or pitfalls that users of blockchain technology need to be aware of?
Right. So, two aspects. The first aspect is, if you the traditional way of investing in cryptocurrencies, you buy through a centralized exchange. Obviously a few risks, right? Number one is your own due diligence risk of choosing the coins. If you choose a very obscure coin with low liquidity and volume, obviously that's going to be hard on you with the price volatility. Now, there's also a risk of you storing your coins in a centralized exchange like Binance or CoinHeco in Singapore, Independent Reserve. So what happens is that since you're entrusting you're putting your funds in those centralized exchanges, if they go down, your fund goes down. There's no, it is not it's not non, you don't have custody over that, right? So the best way to manage your funds is, once you buy your stuff in centralized exchange, just put it back to your own wallet, and this could be form of your online digital wallet, or like this, or your hardware wallet, which is the most safe, the most secure way for you to save your funds. So I would really recommend people to store their funds here. Now, on the second category, which is DeFi, the risk is the main risk is just smart contract risk, where the protocol that you lock in your funds in, it is there's a what you call that, there's a vulnerability in the codes under of the smart contracts. How you can hedge against that is basically ensure that when you're investing in DeFi products or protocols, make sure that they have been audited and certified, audited by third parties, so you know that their codes are okay.
Okay. Susanna also would like to ask a question. Her question is, how does blockchain in food systems work?
In food system, now that's a very interesting. If you're talking about, there's different permutations that, especially like halal, right, or supply chain. Now, supply chain blockchain tracking has there have been different projects focused on that globally. You look at, for example, the certification of how from the supply chain, from where the food was sourced all the way to production, all the way to the end users. You can track the entire thing, but there are already projects focused on that. Is it getting traction? I don't think so, because the thing is, blockchain as a database, uh, it there are some, as purely, not from a financial value point of view, but from a for example, supply chain point of view. It may not be needed because a central database can do that, but for something to happen, right, from industry perspective, right, for blockchain to work, every stakeholder must be part of it, right? Every part of the stakeholders within the industry, creditors, suppliers, debtors, or in the banks in between, must be part of it, so that you preserve the integrity of the entire supply chain. If there's only one party using blockchain, the utility is limited, right? There needs to be this a consortium-led effort. So that's the hard part, convincing all the stakeholders within the industry to be part of it, which is hard. I mean, how do you tell investment bank, hey, change all your database into blockchain? Like, whoa, so that's the hard part in enterprise solution.
I think a question that everyone would like to ask is, what's that USB looking,
Okay,
thing that you
so
hold just now, and
this
how
is
do you get it?
this is what you call a hardware wallet, and this is one of the most secure ways for you to manage your funds, because all you have to do is just plug it to your computers, and then there's an interface that shows, okay, this is your balance or what coins you're trying to hold, and you can, if you want to send it something right now, just plug it to your computer, use an interface, and the various interface that supports this is non-custodial, in a sense that, oh, it's just simply an interface. You can use any other interface and your balance still show up there, and you can do that, right? That interface can just be deleted or gone. It doesn't matter, because what matters is that all the funds are here, are stored safely. So this is what you call a hardware wallet. There's different forms of hardware wallets right now. The most popular being Nano Ledger, which is what this is. This is what you call a Nano Ledger, or Trezor, right? So if you want to manage your funds, if you want to get into this and store your coins properly, instead of storing that in a central exchange, where if it goes down, right, like right now, Binance is facing a lot of scrutiny. If tomorrow they choose to switch off everything, the funds in your central exchange will be gone, right? So there's no recourse. Right? So that's why always keep your the funds with you. It can be an online wallet, right? An online wallet is, I mean, you can also have custody over that. All you have to do is memorize, or just make sure that you know your private keys. Your private keys is the one that manages your private keys is just a random information that you must store to ensure that you can retrieve back your coins. If your hardware wallet, sorry, good question. If your hardware wallet is stolen, what happens? This is protected by password, right? And also protected by your codes. So whenever you set this up, there's a 24 unique words that you have to memorize or write down somewhere and store that. That 24, those are your private keys, basically. So this gets stolen or destroyed, I don't care, right? Because when I say that the coins are in here, it doesn't mean literally. The coins, the only way that you can move or manage your coins is via your private keys. Your private keys in the context of wallet is basically your PIN number in your bank account. So having your private keys is the most important thing, because you can just buy a new one the next day, and just when you're trying to configure this up and they ask, are you trying to set up a new one, or are you trying to set up one as in an old one, right? And the old one, you just re-input your private keys and all your funds are still there. So it costs like a 97 right now, I think 60 to 80 USD, you can get something like this. Good investment. But if you don't want to spend that money, just use, for example, MetaMask, which is an online wallet. Online doesn't mean that online meaning that is, again, all these wallets interfaces only. What matters is that when you create a wallet there, you save the private keys, which is a bunch of random words. All you have to do is save those keys, and you can use those keys in other interfaces. MetaMask is the most popular uh, online wallet, which is free, right? Meta as in META, mask as in mask, MetaMask.
Someone also shared a concern, like, is this like a new way to wash money?
It is definitely a new way to work, as in, look, again, things like this technology is agnostic. This financial system is agnostic. It doesn't care, or it doesn't care what you do with it, right? It just like the traditional financial, you can find ways to wash money in the traditional financial system, right? Just as you can in this system. These are just systems. Systems are meant to be agnostic, and it's really dependent on the participants to do it whatever they want with that, as in way with that. Of course, it's easier. If you're saying that, is it easier to do it here? Yes, it's easier to do it here. But there's growing regulations around the world to regulate something like this, where the first point of entry into cryptocurrencies, where you buy your crypto or Bitcoin with your bank funds, that is the regulated infrastructure, right? The fiat on-ramp. So that is where, you need to be regulated, do the KYC, blah, blah, blah. And then you get in the system, and then you can basically be online all the way.
Okay, thank you. All right, so are there any other questions in the next 5 seconds? If you do, please just, maybe unmute yourself and yeah, ask away. Okay, Shakir typed something in the chat. Right now, the world is moving towards being environmentally sustainable. Is there any possibility that blockchain tech stop because it's taking too much resource, contributing to global warming?
It's kind of a funny question, because one of the most explicit ways for us to move towards a fossil-free environment, carbon, to reduce carbon footprint, is through electric cars, which uses electricity, right? And therefore, but you use electricity as well to mine cryptocurrencies, and then cryptocurrencies have a bad rep in terms of having a large carbon footprint. Although, right now, two ways, right? Number one is that increasing reliance on fossil fuel means that the derivative uh, electricity is now renewables, using renewables energy to mine. But also there's on the tech side, on the second way, the tech side, there are ways to find consensus, what you call consensus algorithm, right, which powers the blockchain, right, to move away from computing intensive technologies like Bitcoin uses proof of work, to a more sustainable like proof of stake, where you don't have to use extensive computing resources, but you just use the funds that you have and stake it, and then you can validate. So those are the ways that the industry are in line with sustainability concerns or projections.
Okay, before we take the last two questions, I would like to request everyone to turn on your cameras so that we can have a group photo. Mohammed, take it away.
Okay, everyone. Anybody else wants to on their camera? It'd be nice if everyone on the camera so we can take a nice photo. Okay, I'll take the photo in 5 seconds. So you can smile. 1, 2, 3, 4, and 5. Okay, wait, I go to the next page. All right, thank you, everyone.
All right,
Back to you.
thank you. Okay, so the final two questions, yeah. Um, okay, so what are the current laws and regulations, if any, on the use of blockchain?
That's so much. I mean, for my company, as in, I mean, I've in 2 years in my time, most of my work is around regulations, as in ensuring that we are compliant, blah blah blah. And from a blockchain perspective, as in regulators are currently trying to find ways to regulate. The most pertinent is KYC AML, know your customers, and anti-money laundering laws, and that is where any transaction using cash to buy Bitcoin, it must follow certain parameters. Like, we must know the users. So how do we know the users? They must give us their IDs, they must give us their proof of address, all the personal particulars to ensure that we know them, that they are not working for terrorists, blah blah blah. Those are the main things that we are all platforms, centralized exchanges or centralized entities must do in terms of regulating. In terms of other blockchain regulations, is very fuzzy at this point of time in terms of how do you want to regulate crypto assets, or what kind of things does it entail regulation, utility versus security, coins, still nascent at this point of time. But I mean, for another discussion on focusing on regulatory things, I think that's a very interesting topic if you're in an industry or wants to know more about that.
Ashari raised, there's still confusion between coin and blockchain, which is not addressed.
Yeah, at first when I said that I mean, there is a bifurcation between cryptocurrencies and blockchain, right? Cryptocurrencies are basically coins, right? And therefore, most all coins are cryptocurrencies are based on the blockchain. Now, you can do your own research and looking at any coins in the market to see their value propositions or how they are different and their potential. And then, those are no different than a repository of stocks or investable assets in the universe, right? You would do your own DD to look at the stocks, just as you would look at a coin. For example, how do you analyze a coin? Fundamental analysis, technical analysis. So all those investable cryptocurrencies are based on blockchain. I mean, the underlying tech is blockchain, right? But when you talk about, for example, blockchain, in terms of you want to talk about different permutations of blockchain, there are different use cases. There's in enterprise blockchains, like private blockchains, which is something that if you want to be part of, either you're in the industry or you invest in the entity, like an equity stake in those entities, which is something I don't think you guys would be would be in that context of investment.
I guess we'll just take the last final question before we wrap up. Queenie asked, is gold dinar also cryptocurrency or blockchain?
Gold dinar is gold dinar. Gold dinar is, no, I hope I'm understanding correctly. Gold dinar in terms of for example, a project that focuses on gold dinar blockchain, right? And that, I mean, frankly, I'm really not a fan of all this like explicit as in not Muslim explicit projects like that, which there are already like gold backed tokens, which have much more popularity and traction and credibility, so those, I mean, not to reinvent the system or things like that, but again, do your own due diligence, because there are other gold backed tokens out there which has far more credence in the market.
Okay, thank you so much. Okay, I've dropped a link to the feedback form in the chat. So please do, help us by filling out the feedback form. So thank you guys for spending your Saturday with us and staying all the way till the end of the masterclass. So just please remember to do the survey so that we can improve and possibly bring in your suggestions for the next learning circle. So yes, thank you. Should you be interested in contributing to our charity, head over to our website at amp.org.sg. So thank you. Thank you so much, Aziz. And thank you, everyone. We'll see each other again in the next learning circle.